Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. It may be an uncomfortable question to ask right now, given the dominance that Apple has in the tech landscape with products that are extremely sticky. I'm using an iPhone right now to record this. I have it connected to a Mac. I have AirPods sitting next to me. I'm one of the people that uses Apple products all the time, but I think it's worth asking if the stock is currently overvalued. And this is coming ahead of the company announcing a new iPhone likely next week. But the way that they're going to grow revenue is actually by increasing prices, not actually making these products more accessible. So I want to go through some of the trends and what we're getting as investors in the stock. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing, in the show notes. And I want to start with one chart that I think is really telling, and that's the number of iPhones that have been sold each year. Now, this is data from Bank My Sell, but you can see that iPhone sales have been essentially flat since 2015. The company is not growing because they're selling more iPhones. They're growing because they're selling iPhones at a more expensive price, and then they're adding accessories like AirPods were extremely successful, adding on services. Google's obviously paying more and more each year to be the default search engine, but there's all kinds of subscriptions for data storage, for games, lots of other ways to monetize these devices, but there's not a lot of new devices going into the field. So I think that's an interesting trend to look at for Apple. Is the way for them to grow the company financially is just to squeeze more and more out of the users that they have. There's only so far you can take that from a growth perspective. And the reason this is worth pointing out is Apple stock is trading for 30 times trailing 12-month earnings and 28 times next 12-month earnings. I'm going to open this graph here because I think this is really telling. If we go back 10 years, you can see that Apple stock in 2016 was trading for 10 times next 12-month earnings. Investors are paying triple that right now. And I would argue that there's going to be less opportunity for Apple to grow the company over the next 5 to 10 years than there was to grow the company over the last 5 to 10 years. So the simple way to say this is the easy money has been made. That's not really a great saying because it wasn't easy to hold Apple through this entire time. But we're definitely paying more today for a bigger company and probably a slower growing company than we were 7, 8, 9 years ago. Apple has also changed a lot from a balance sheet perspective. The company is using a lot of its money to both pay a small dividend, but actually buy back a lot of its shares. And it's been buying back at these elevated prices. You can see here the cash and investments, $63 million, and then total debt of $110 million. The interesting thing there is that years ago, we used to see Apple have a huge net cash balance. They're now not doing that anymore, probably because earnings are a little bit more stable. Steve Jobs was a stickler for having a very, very strong balance sheet. So Tim Cook has been a little bit more aggressive with that, a little bit more aggressive with buying back stock. But that's really the trend that we see on the balance sheet, is it's not quite the strength that it used to be. On the bottom here, you can see analyst estimates for fiscal year 2023. You can see that estimates are for sales to actually drop by 3% and earnings to fall slightly as well. Next year, they're expecting sales to increase 6%. That's likely driven by higher sales for iPhones. This next generation iPhone is likely to be a little bit of a form factor change. That often leads to higher sales for customers who have been waiting a little while to get a new phone, and then expecting sales to grow another 7% in the following year. But like I said, this is not a high growth company. You can find a lot of companies, even in the tech space, that are growing in the double digit range, but trade more like 10 to 15 to 20 times earnings. So Apple is actually a relatively expensive stock right now. I think the way to think about Apple stock is, where does it sit in your portfolio? Is it something that's creating a foundation that if there is a sell-off, Apple's probably not going to be one of the stocks that sells off 70, 80, 90%, like we see with a lot of tech stocks, much lower risk? That is a very reasonable thing to have in your portfolio. And I own shares of Apple stock for exactly that reason. But I think we do need to temper expectations for what Apple is going to be in the future. We may be at a point that a company like Microsoft was in the early 2000s, where the stock doesn't go much of anywhere for a decade because it's just growing into the expectations that have already been priced into the stock. Investors who have a lot of gains in Apple may want to take some time to look for other opportunities that are trading at a little bit better valuation, maybe have another solid business, but aren't trading for upwards of 30 times earnings. I've been doing that a little bit over the last year. And given where Apple trades, arguably at a fairly overvalued multiple, given its potential for growth, I think that's a prudent thing to do. But what do you think about Apple stock? Do you think it's overvalued? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.